Right now, investors are digesting the latest economic data from the U.S., which shows inflation slowed more than expected in January, offering hope, and the U.S. inflation problem could be easing. Consumer price growth slowed to an annual pace of 2.4%. So for more on that, we're joined now by Andrew Pyle, Senior Investment Advisor and Senior Portfolio Manager at CIBC Wood Gundy. It's good to see you. Thanks for joining us.
Good to see you, Lindsay. Thanks for having me.
So I'm wondering what you make of these latest CPI numbers. Do you think it offers a bit of hope?
Well, I think there's a glimmer of hope. Markets are obviously relieved this morning. I think given what we saw in anecdotal energy costs in the month of January, given the cold snap in the States, a lot of economists were, anxious that this number could come in on the hot side. It didn't. So that's where your relief rally is coming from this morning. I don't think we're out of the woods. And, a lot of people are talking this morning, Lindsay, that this puts Fed easing back in play, perhaps for the first quarter, second quarter. I honestly don't think the Fed is going to change its game plan just based on this one number. There's still a lot of uncertainty in the inflation makeup for the States.
Okay, that was going to be my next question. So you don't think there's going to be a change in terms of the Fed's plan? So how many rate cuts do you think we're going to see this year? I know some analysts are saying 2, some are saying maybe 3 now. What do you think?
Well, we still think you could get 1 to 2, and I think that really is dependent on the fact that inflation has to remain down in these levels or lower, because that's the only way you're going to get 3, 4 or more is if you have either a more protracted decline in inflation, which we don't think is in the cards right now, or in fact you get an outright recession in the United States, which obviously would put the Fed back in the game. I think for now we're sticking with the 1 to 2 rate cut plan for 2026.
Okay, so we'll obviously keep watching that. But of course, we're watching earnings coming in today. We've got a couple of different companies I know that you wanted to discuss. We'll start with Agnico claiming, I think this is interesting, in the latest results from Agnico Eagle, actually claiming the number 2 spot for gold output, knocking Barrick Mining out of that spot. What do you make of what we're seeing from Agnico?
Well, incredible results. Obviously, we're keying off the extremely high price for gold, but I think it's also the fact that we're seeing output increase. And I think that's where analysts are going to be very happy this morning. Obviously, owners of the stock are going to be very happy. We've seen the stock pop. And so they're really delivering on all the guidance that they have given in the last recent while, that they can increase output, they can get those margins to improve with this higher price of gold. And again, a lot of investors are going to sit up this morning, Lindsay, and say, okay, so now second largest company in the world, this really gives you an even more or an even stronger demand push for the stock.
We're also watching Air Canada. Obviously not the best week for Air Canada after announcing that they were going to be suspending flights down to Cuba, obviously because of a fuel shortage there. So not good news for Cuba either. We saw shares of Air Canada go down this week, but reporting a beat in profits, Q3 profit up $296 million from last year. What do you make of what you're seeing from Air Canada?
Well, it's a theme that you're going to see across many different sectors and many different companies, Lindsay, and that is, this shift in travel towards Europe and towards domestic based on what we've seen coming out of the States. Travelers simply, steering clear of destinations that they once would have just gone to and where Canada flies to, but now, moving those plans domestically and abroad into Europe. Obviously, you've got the Olympics as well. So, the company is reaping the rewards from that, but we've seen that also, for example, in Airbnb, where we're seeing increased travel demand in those other areas outside of the States. So, I think great results this morning. It's obviously a relief for the company after the turbulence, pardon the pun, that we've seen in the stock over the past week.
It is interesting to see some of these companies, like as you mentioned, Airbnb as well, almost benefiting in a way from what the tensions that are going on between the U.S. and Canada. And I guess that will continue until we reach some kind of deal with the U.S. Is that right? Like what I'm asking is, will Air Canada and Airbnb continue to be able to offset what we're seeing in terms of that tension between Canada and the U.S.?
I think they can. I mean, obviously, this is hugely uncertain right now. There is no clarity to this situation whatsoever. It's as clear as mud as we sit here today. So we honestly don't know. What we do know is, the traveler's choice in terms of destinations. I mean, when we look at Europe, for example, Lindsay, I mean, this is a high cost area when we start talking about things like hotels and hotel travel. And that's where, again, a company like Airbnb picks up the slack, because travelers are going to look for that experience, but at a lower price point, and therefore they're going to go to the likes of an Airbnb, and that's why I think we're seeing the results that we're seeing.
Okay, we're also watching Applied Materials up more than 11% right now after reporting pretty good results, upbeat sales forecasts. What do you think is contributing to what we're seeing with Applied Materials?
Well, still extremely healthy demand for semiconductors, which is AMAT space. Stock has done extremely well. It's interesting after a week like this, Lindsay, where we're hearing more and more analysts and investors talking about a broadening of a sell-off in tech in general, obviously reaching into the likes of software, that you still find these pieces or these slivers of hope in that sector. And Applied Materials is one of them, where that demand for semiconductors continues to improve. Demand for memory obviously continues to improve, and companies that are in that space will continue to do well, even if you have a general kind of decline in sentiment for the sector as a whole.
And lastly, I know you wanted to talk about Bombardier. I think this is going to be an interesting company to watch in 2026. They beat in revenue and surpassed his 2025 guidance, but maybe, again, maybe some turbulence ahead for this company. What do you think?
Yeah, I think a little bit of a cautionary tale. I mean, the results are great. The market likes what they're seeing, but we have to deal with the states. We still don't know what is going to happen with respect to the FAA's decision on Bombardier, on planes coming out of Bombardier. So that's a huge question mark right now. If it gets resolved, I think we're all clear for 2026. But that's one thing that I think is going to keep investors on the sidelines, just to see exactly what happens, what is the future for this company or this company's products with respect to the states.
Absolutely. A lot to watch for. Andrew Pyle, Senior Investment Advisor and Senior Portfolio Manager at CIBC Wood Gundy. It's good to have you. Thanks so much for joining us.